NIO facing some downside alongside the broader markets in fear. Well, let's just go ahead and find out exactly what NIO is up to within this video. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with an NIO technicals and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community called ARCa on Discord. With that said, let's go ahead and dive right into the charts. Okay, so we are looking at NIO on the weekly time frame here. This is the macro perspective, and we can see that we are currently within the support range that we called here from a previous gap that we had back in 2020, May 2020. So we are currently within that range. What I am noticing here is that in 3 days we can actually potentially make a print here of a bullish hammer. If it is a bullish hammer printed at the bottom side of a trading range, we could actually see some momentum towards the upside. We did actually notice this weekly candle here that printed as a hammer as well, and we said usually this doesn't present a good outlook for price action. Okay, so excuse me. So now, yeah, we're looking at a potential continuation to the downside, and I think this is in respects to the FOMC minutes coming up on Wednesday the 23rd. This is these are trying times. You know, we have the PPI data and the CPI data coming in with a beat, and I know that the Fed is still looking for the PCE or PPE data, I believe. Sorry if I didn't get the acronyms correct. But they are gonna elaborate on what they're gonna continue, or how they're gonna move forward based on the beats that we got on the economical data. Now, we're expecting a pivot, but to be honest with you, just like Fed Bullard said, that the wishful thinking of everyone, you know, for a Fed pivot is that in and of itself is actually a reason to continue raising hikes. So it's just that's really something to, you know, to let sink in. But let's go ahead and move on to the next chart to see what we have. So as you can see here, we were in a bearish formation. We already knew this. We were within an ascending channel, and this ascending channel is usually bearish by nature. It has since failed, and you can see here that we actually used this candle here to come back and test the newly converted support into resistance in order for us to continue a path to the way down. Now, you know, this is actually a very nice print of a 4-hour candle. This is a hammer at the bottom of a downtrend, and it could help us with a move to the upside. Another bullish formation that's happening right now is that we are within a falling wedge. And now this falling wedge is usually a bullish setup. So this can take some days for us to resolve. What we can notice, and the good thing within what's happening here is that we are forming a series of higher lows and also forming a series of higher highs. Now the problem here is that using this higher high or lower high now, and using this as a break of market structure, since this was the previous higher low, we could potentially see a continuation to the downside within testing, you know, by testing this falling wedge and eventually breaking out when we're closer to the apex of the triangle. Usually these triangles break out at about 70-75% to the apex. So now let's just open up some moving averages just to see what we have against us. Okay, so we do have the 7-day exponential moving average right at the resistance of this falling wedge. We have the 30-day exponential moving average right over here. Let's close these out and look at the SMAs, which should all be above us now. Okay, yeah, so we do have the 10-day simple moving average, the 100-day, the 50-day, and of course the 200-day is going to be way up here. But these are also entirely against us for the upside. So this when breaking out of this triangle and making our ascent, it is going to be some choppy action. It is going to be difficult unless there is some type of catalyst that can actually just thrust through all of this right here. But for the time being, it is looking partially bearish within a bullish setup. Just know that I am saying that. Okay, so let's go ahead and move on to the next chart. This is going to be the RSI, so we're going to look at potentials for the next coming session. So I made a diagram for the new viewers of my RSI properties, so particularly for the zones. This is just the same RSI here. We just blew it up right here, so that you can follow along, and I don't have to explain it in every single video. Okay, so now we're looking at the 30-minute immediate short-term time frame without any. It has a downside suggestion, but it's very, very weak. And the only reason that I believe that we can continue to the downside is for the fact that we are well within the deep areas of the bear weakness percentile, which means that we can be gravitated right into bear strength. So it could be likely that we can face that downside. Bi-hourly is okay. Well, this is bearish because we are. This is the signal line of the RSI, the choppier purple line, and this is the moving average. When the signal line is below the moving average, it's bearish. Okay, now we are within the shallow areas of the bear strength percentile, which means we can be gravitated right into here. But as you can see here, the moving average has kind of served as like a guide to the way down, if you will. So this is potentially looking a little bit bearish. Okay, so let's look at the 6 hour. The 6 hour is also in a similar pivot to the one for the bi-hourly, and it's also in the deep areas of the bear weakness percentile, which means that we can be likely gravitated right into the bear strength. The moving average is also above us right over here. Now the daily, actually, you know what? Yeah, let's go ahead into the daily instead. Excuse me. Okay, so the daily RSI is suggesting a downside, and it's now, let's zoom in just a sec, let's see. We are making a cross, yeah, we're definitely making a cross. This is a bearish cross in the works. We're about to move below the moving average, and we are also in the deep areas of the bear weakness percentile, suggesting a continuation to the way down, which is very much in accordance to what we're talking about within our falling wedge. We can potentially see just a short-term upside to test the resistance before a continuation on to the way down, potentially 1 or 2 sessions before us trying to break out. But that's what I'm looking at for NIO in the short term, you guys. So if you have any questions, please reach out to me. You know, I'll make sure to leave the links in the description below for you to consider joining the ARCa trading community. Please know that I'm not a financial advisor. Take whatever I do say and iterate within these videos as a form of entertainment. I need you to do your own DD and we'll be okay. But with that said, I think this is a good place to leave off. And I wish you a good night, and I'll catch you at the bell mañana. Adios.